We're going to be talking about a trade that a lot of smart money traders I know took this week, made over 100 pips profit. I know that if this trade continues to go in our direction, in our favor, it could reach to 200 to 300 pips. I'm still personally holding it. I'm going to talk about exactly what happened and why it happened. And so think about it. First thing you want to do is look at the higher time frames. Look at the weekly chart. Higher time frames trump lower time frames. Market is going to be eventually going towards where the higher time frame is going. And so if we analyze the higher time frame, you see this high right here, lower high, higher low. Oh, sorry. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So we're pretty bearish long term. So we should be in the long term looking for shorts. But that doesn't mean that you can't find, separate opportunities in the market, on the short-term time frames to kind of go against the long-term time frame. It just has to be a really good setup. 8 times out of 10, you want to be looking for trades that line up with the higher time frames, because you'll see a lot longer and lot farther higher volume movements if it lines up with the higher time frames. You can see how many pips this is moving downwards. I mean, this is what that's a crazy amount of pips. I mean, it's almost 1,800, 2,000 pips. You know what I'm saying? And so you just want to be looking for movements that kind of coincide with your short-term, movements. And so if we go down to the daily chart, we see a couple things here. I didn't even mention. I'm seeing some opportunity, even though that the currency is bearish. I'm still seeing opportunities for price to rise a little bit. You see this institutional candle right here. I'm looking for price to come and fill this imbalance and eventually touch this candle. I've been looking for that for months now, maybe 2 months. Still hasn't happened. Hopefully it'll happen soon. But yeah, that's what I'm looking for. And so, I'm overall bearish on the currency given the longer time frame, but I do see some opportunities for upside. If you go in the daily time frame, you see that there's another imbalance here. This has got to get filled. This whole entire zone right here has got to get filled, and because that's just inefficient price movement, right? So this entire zone right here has got to get filled eventually, and so I'm looking for price to go back up there. Another thing we see on the daily is these equal highs. So yeah, we see price. I can see price coming back up here, filling this imbalance, breaking this these equal highs to purge liquidity. And so yeah, I mean, if you think about it, retail traders will probably see this as a support line, and so they'll set a sell position. So if price comes back up here, sell, stop around there. They'll look for price to to break here, or not even break, just kind of tap that support line, shoot back down. Or you could also see other retail traders who are looking for price to break these highs, and so to keep going up, right? But what we see in the market is that typically price will do what retail traders think is going to happen, either break these highs, right? Break these highs a little bit, and so you trigger the buy stop positions so that retail traders are buying, or you will hit the stop losses of the sell stop positions, because what that forces the retail traders to do is to buy back the position that they were shorting. And so that gives a lot of liquidity for the big banks, because then they'll shoot price down because they will be able to sell off, since there are so many buyers that are currently in the market, right? The reason why you have to do that is because big banks have trillions of dollars, and they're the ones who are really making money. They have trillions of dollars. They need all those orders to get filled. Me, my friend Tom, Jerry, James, all my friends, maybe we have cumulative of $100,000 in our account. That's not enough to fill $1 trillion pending orders, right? They need a lot of people to think the same way. They need a lot of people to buy at the same time so that they can sell and fulfill all their orders. And so, this is why this high, I'm looking for it to get taken and fill this inefficient movement right here, kind of come into all this bullish pricing tap that, go back down. But for now, I'm still pretty bearish. I'd like to see for some areas, some key areas to get filled before we see the upside movement. I'd like to see this entire imbalance right here get filled. And you can see that price has not yet come and filled this entire imbalance. And so I am still pretty bearish. And if we look down in here, we see this beautiful, beautiful 4-hour candle, right? It's 4-hour institutional candle, right at the 50% of it. If I draw a fib retracement, right at the 50% of the candle, you see price came right into that right over here. Price tapped that 50%, started going back down. That's the opportunity we were looking for. If you even zoom into the 1 hour, you can see that right at the 50% right here, right at the 50% of that 4-hour candle was this beautiful bullish movement before the ultimate sell. And so we're looking for price to come back into that area, tap that exact bullish candle right before the entire sell-off, right? And then we see price fall again. And I'm looking eventually for price to fill this entire imbalance before we see a massive movement all the way up to fill that weekly imbalance, right? Yeah, so that's a trade. You know, it was really good. We saw it happen this week. I'm still in it. And, you know, I hope you guys are going to subscribe, continue to watch my videos. Please subscribe, share this video with your friends. A lot more videos coming every other day or every day on this channel, talking about smart money and just showing you good setups that we experience throughout the week. Yeah, so appreciate it.